Should you buy a home in 2022? That's a question that a lot of home buyers are asking at the moment. With record appreciation, with interest rates on the rise, affordability becoming a problem for a lot of home buyers out there, and at the same time, record low levels of available properties to choose from. So if you're a buyer trying to navigate this market, what things should you consider? And that's what we're going to dive into in today's video. We're going to talk about what the market's doing, what you as a buyer, potential buyer, should be thinking about, and then we're going to help you try to navigate it. We're going to talk about some occasions that I've had as an agent recently in putting in offers, what home buyers have been doing. Because if you're a buyer that's going to try to make offers in this market, you should know what other buyers are doing so that you have an idea of your competition so that you can make competitive offers. You know, it's good to be informed. It's good to have the necessary information. Whether or not it's the right decision for you, it's good to be informed so that you can make the right decision if it's the right property. Now, for many home buyers out there, you've been trying to navigate this market for more than just a couple of weeks. I have home buyers that have been looking for property going back 6, 7 months. And in fact, we were making offers back then, and the market has appreciated considerably since then. In fact, we saw year-over-year appreciation from 2020 to 2021, somewhere around 19%. And if you're here in Orange County, where I'm located in Southern California, the cost of living to purchase a home rose by nearly 27%. And that was before interest rates peaked right around 4%, which is where we sit today. That's because home prices have gone up, and at the same time, interest rates have risen. So that home is more expensive to own. So if you're a home buyer out there, you're probably thinking this can't continue. You know, 2020 saw record appreciation. 2021, record appreciation. How can the market continue to appreciate at this pace and remain stable? Well, we're going to talk about that because a lot of people out there believe there's a crash coming, right? Everybody believes, well, this can't continue, so it has to crash, right? Well, no. And that's what I want to take a minute here and talk about, because if you're considering buying a home, you should understand the risk associated with it. It's not always a great time to buy a home. Now, you're probably shocked hearing a real estate agent say that, but it's the reality. And I don't believe that most real estate agents do believe it's always a great time to buy, but it's something that a lot of people associate with real estate agents. When they think of real estate, they think every agent's going to tell you to buy a home. No, it's not always a great time to buy. In fact, depending on where you're located in the United States at the moment, you should really consider whether or not right now is the right time to buy. And we're going to talk about some factors that you have to consider if you are going to pull the trigger. Now, a moment ago, I mentioned, depending on where you're located, you should really weigh whether or not you should be buying a home. Here in Southern California, we've seen appreciation 20+% over the last year and a half. Areas like Boise, Idaho have risen considerably. Areas like Arizona, areas like Texas. These are markets that you have to start looking at, wondering whether or not it makes sense. And what we like to do is go look at some of the data that's out there, right? There is data that shows what the average homeowner in a certain market spends towards their mortgage. And why does that matter? Because a lender will only allow you to spend so much of your income every single month towards a mortgage in order to be qualified, which brings affordability into question in many markets out there. And so when you're looking at Southern California and you start to look, what is the average buyer spending debt to income ratio wise every single month towards a mortgage, and you're teetering on 43, 44%, you start to wonder how many more buyers are out there in that market, right? Because demand is what drives the market along with supply. And if demand slows, then that allows supply to build and the market might slow a little bit. But if you take areas like Texas, for example, Texas is one of those markets where the average buyer is spending about 22% of their monthly income towards a mortgage. So there's a lot of room for growth in those markets. Now, you might say, well, they're smarter in Texas or home prices are less in Texas. Both could be true, but what I will say is it gives prices room to run, because if people continue the migration patterns out of states like California into states like Texas, have a lot of cash, they might be able to drive prices higher. So depending on where you're located in the United States, it might be something that you consider a little bit more closely than just a couple of years ago when home prices were lower. But for those buyers out there thinking, that the next move is a housing crash, let's take a minute here and just talk about this. Now, I've talked about this in several videos over the years, the differences in 2008, you can say 2007, you can 2006, whatever the year you want to reference, but let's just use 2008 here. The difference in that market versus this market. And the key piece of this whole thing is supply. Supply really drives the market. If you have a lot of something, then people don't really have to fight over it. They don't really have to bid higher than the price to get it, right? They can all get what they want when there's a lot of something. But when there's very few of something, let's say inventory at the moment, right? When there's very few houses, interest rates are on the rise. There's a fear out there among buyers that interest rates might go higher, that home prices might go higher. You've got competition on those properties, and people are willing to do things like bid above the asking price, like waive contingencies, like, whatever it is in order to get into a property because, a fear of missing out or beating out the competition or whatever it is, the market continues to go up. But in order for a market to crash, you have to have supply. You have to have a ton of supply. Back in the last housing debacle, we had 12 and a half months of supply of homes. In addition to that, you had credit. Credit was an issue. And I'm not talking about people's credit. I'm talking about being able to get credit, being able to get financing. Because the pendulum swung from, stated income loans, 100% financing, craziness in the market to the other side where everything had to be verified. You needed a down payment. All the loans were fixed. There were less buyers out there that could actually qualify for homes. And that was a problem, right? And at that time, buyers had no equity in their property because many of them purchased at 100% financing. Their loans started to adjust. And then they went out saying, hey, I want to try to get a new loan. I can't because the standards on credit and underwriting had changed. Guess what? Now they're upside down. Their property's worth less than they owe on it. And yet they can rent a home across the street for less money than it would cost to own the current home they're in. So many people just said, screw it. I have nothing in this property, just going to ruin my credit for a couple of years. I'm out. And foreclosures came to the market, and that's what created all of that supply, along with home builders building an excess of property. The difference between now and then is you don't have that excess supply. You don't have excess foreclosures. In fact, foreclosures are at a record low. One, because there were moratoriums on them, but two, because of appreciation over the last couple of years. The average homeowner has $185,000 of tappable equity. That's in addition to the 20% equity they need to just be able to tap that equity. So the average homeowner has more than $185,000 of equity in their home, in addition to there being $9.9 trillion of equity in the system alone. So there's a lot of money in homes. So if a consumer, a homeowner, needs to sell their home now, they just put it on the market at market value and it sells. It sells instantly. It doesn't matter if they're distressed or not. They could be behind on their payments. It's not a foreclosure situation like we had before. So the foreclosures aren't really going to add any supply to the market. In addition, this time, we're somewhere between 4 and 6 million units behind with regards to homes for sale. Everyone wants to talk about new construction. Everyone wants to talk about permits being pulled, new housing starts, what have you. I don't care how many permits are being pulled for new construction or how many housing starts there are. How many completions are actually happening? How many houses are actually reaching the completion date, and actually finishing in order to add to that number of homes that we're behind? Because that's what really matters. It doesn't matter if you pull 2 million housing starts. If you only finish 100,000 homes, there's no real impact to supply. And that's what's driving the market. Now, depending on where you're located, there might be more housing construction, there might be more home building. Real estate's local, right? I'm in an area, Southern California, there's not really land to build unless you go further east into the desert or little infill pockets here and there, but there's no excess building. Now, in other states across the United States, there might be a lot of building, and that building might add to the supply and slow the market. But if you're in a market like Southern California where it's difficult to build, take New York City, for example, or Miami, Florida, places that are densely populated, not a lot of available land, it is going to be difficult to go in there and build homes, which means supply is likely to stay low. So for anyone out there pitching a crash, tell me where the excess supply is going to come from, right? Rising rates are one thing, but we've seen rates rise from just over 3% at the beginning of the year to 3.92% recently. So interest rates have risen nearly 1%. And what we've seen is demand actually pick up. What you need is interest rates to go up above 4% and stay there for an extended period of time to allow demand to slow down, which would allow supply to build. That would actually slow the housing market. But I didn't mention a crash. It's not going to crash the housing market. If anything, you're going to see a correction in housing. And honestly, a correction would be somewhat welcome. A correction is going to be 10, 15, 20% in the market, some sort of pullback. That's not a crash. And so if you're thinking you want to wait until a 15, 20% pullback happens, that's okay. It's okay to wait, but just understand that home prices might rise between now and then. You don't know when that pullback's going to happen. So just understand, if you're on the sidelines, know what you're waiting for, because what happens is most people see a pullback in, 15, 20% in a price, and they say, oh, that's just the beginning. I'm going to wait until it goes further. And guess what? It doesn't go any further. It turns around and goes back up. And most people end up missing that opportunity. As they say, no one wants to catch a falling knife. And as home prices start to decline, at some point they will in the future, nobody wants to be the one that buys a property on the decline, right? But guess who's going to step up? The hedge funds, the pension funds, those with cash, investors looking to take advantage of the market. So just know what you're getting into if you're thinking of buying a house. Now, in a moment, we're going to talk about some life circumstances that you have to consider if you're thinking of buying a house. Some of the things that I would consider, looking back on, experiences, if you will. So we're going to talk about that. But before we do, let's talk about what home buyers are doing in this market so that you have an idea, if you're planning on making an offer, what to expect, what you're going to be up against in most markets out there. Now, all markets, again, aren't going to be the same. So just make sure, you know what your market's doing so that you can make, the right offers. Talk to your agent, all of that good stuff, and have those conversations. But here recently, I listed a property here in Southern California. We had 22 offers in just over 2 days. Now, this was a property that was priced at $850,000. It actually has a view of the freeway, so it's very, very close to the freeway. You hear the freeway noise. And it was priced about what I thought it was worth. I thought it would sell probably a little bit higher, but we had 22 offers. And again, just over 2 days. I could have had 50 offers if I allowed additional showings and just kept it open a couple more days. But we weren't looking for that, right? We were looking to get a great offer, good down payment, good terms, and move forward. And what we ended up with was an offer at $1.1 million. So $1.1 million, that's $250,000 above the asking price. That's 30% more than my asking price. Now, buyers came in, and they came in with all kinds of terms. So out of the 22 offers that we received, 14 of them waived the appraisal. So 14 waived the appraisal. Every single offer was above the asking price. Now, they ranged anywhere from $860,000, which was $10,000 over my asking, to $1.1 million. And at the same time, we had many of them with more than 20% down. I don't know the exact number, but more than 20% down. One FHA loan, so there was only one person putting less than 10% down. So 21 offers had at least 10% down. One offer was 3.5% down with FHA. As I mentioned, 14 people waived the appraisal. A good majority of the people waived the inspection. Some people waived all the contingencies entirely, but they weren't the strongest offer. And the majority of the offers shortened their contingency periods as well as their closing dates. So there were a lot of very, very strong offers written in this particular case. Now, the reason I bring this up, even though it can be discouraging, is so that you know what people are doing. So 22 offers. So what happens when the next property in that complex comes on the market? You've still got 21 interested people, maybe not at the prices that are now going to sell, but it wasn't just one person willing to do this. And it wasn't one person at 100% financing. It was 22 people in this case, and I probably had 50 calls. And again, I told you I could have had 50 offers on the property if I had just kept it open a couple more days. We just did 2 open houses, didn't allow any showings outside of that. So, what I'm trying to get at here is there's a lot of competition for a very little supply of homes, as we talked about supply earlier, right? Not only do you have the millennial buyers that are out there, you also have the move-up buyers, those people selling their property, moving up. You have the move-down buyers, those that have larger homes, looking to downsize. Kids have gone to college. They don't need that space anymore. They're downsizing. You have the investor out there just looking for an investment property. In fact, 4 of the people that put offers in on this property were investors. They were looking just to buy it and rent it out, even at $1 million price point. So you have the investors. And then, in addition, some states out there you're competing against hedge funds, pension funds, especially if you're in the Sun Belt down there where home prices are less expensive. A lot of your competition is coming from, bigger money out there, if you will. So there's a lot of competition out there for a very little supply of homes. So if you're considering buying a home in 2022, you just have to get an idea of what the market's doing and be willing to compete. Now, if you're one of those people standing on the sideline saying, I'm not going to offer $1 more than the asking price, I'm not willing to waive anything, that's okay. It's okay to hold your ground, but just know in your market, maybe that's feasible, maybe it's not. If you come to my market and try to do that, you're never going to own a home until something changes. So again, I just want to point this out so that you know what you're getting into if you're considering buying a home. Now, I'm someone at the moment looking to buy real estate. I'm looking to buy investment property. My wife and I have personally been looking for another home to try to purchase. We're at that point in our life where it makes sense to buy another property. And that's the third thing that I want to talk about in today's video. Where are you at in the life cycle of buying property? Are you just coming out of college? Maybe, in that circumstance, it doesn't make sense. But maybe you've just gotten married, maybe you have a kid, maybe you have multiple children, and you need more space. That's a reason to go out and potentially try to buy a home. Maybe you're starting to reach that 32, 33 age. That's typically the age when most home buyers start to think about buying a property. In that case, that's something that maybe you consider. Maybe you just got married and you want to start a family together. Maybe 2 families merged. You want a new space. Maybe you're relocating to another state, need a place to live. These are all reasons to consider buying a home, but you want to make sure that you have a longer term time horizon. That's something I want to stress here, right? Home prices have appreciated considerably. And while I'm not a doom and gloomer, I'm not, one of the big crash people out there. I don't believe home prices are going to drop substantially. I do think home prices need to correct. So if you are considering buying a property, if you have that 5, 7, 10-year time horizon, you've got time on your side, if the market does correct, to be able to move past it, right? For your home price to move back up, if you will. If you're looking to buy a house and only own it for 2 years, if the market corrects by 10 or 15% in some markets, you're going to be upside down or potentially upside down and not in a position to sell that property depending on how much money you put down. So just make sure you have time on your side. In addition to that, you don't want to be stretching yourself on the payment, right? If you can comfortably afford it, you have money in the bank, then absolutely it's a good time to buy a house. But these are all things that you need to be considering when buying a property. It shouldn't be, hey, I want to own a home, so therefore I'm going to go buy one. It has to make sense in many different ways. So hopefully that addresses some of the questions that you have. Now, if you're considering buying a house and want more detail about how the process goes, talk about this market in a little bit more detail, do me a favor, check out this video here. I dive into it. For now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.